Deductions.
Hi, welcome back. We wanted to continue talking about taxes with the IRS introduction. And in this segment, I want to discuss the word deductions. That's also known as write-offs. What can I write off? What can I deduct? What can I write off? This is the biggest question my clients and we all have sometimes is what can I deduct? And actually there's an IRS section, you can look it up, it's called 162, section 162 of the code, and they actually outline the elements of what you can deduct. First of all, it has to be part of what you're doing, part of your business. If you're running a food business, you can't deduct race car tracking, or if you're doing consulting, you can't deduct bricklaying or some other unrelated. So it's part of your business. It has to be ordinary and necessary. Those two words come up repeatedly, ordinary and necessary. And the third element is reasonable. So right away we're talking about it has to be part of your business, ordinary and necessary, and it has to be reasonable. If it's not reasonable, you'll have an explanation. And also has to be paid or incurred in the year that you're reporting. You can't go back and you go, 8 years ago, I bought something, it's helping me today, I want to deduct it. It won't be allowed. So if you deduct it, it has to be paid or incurred in the year that you're reporting your taxes. And the purpose is, it has to be part of your business, but the real purpose is that's to help you make more money, to produce income. It has to have a business purpose. So if you can line all those up, you don't have to think through every time you spend money, does it meet all these? Most people, it does if you have a business. But if there's something out of the ordinary, maybe you charge something on a personal credit card, you want to bring it into the business and you forgot to, or something else, just go through your mind, is this related to my business? Is this normal, reasonable, necessary? And all those boxes are checked. Most of the time it will be. A quick example, a client had a wedding for his daughter, and in his family, it's a big deal for all of his business people to come together and have be part of this wedding. But he wanted to deduct $14,000, and on the bottom of the check for the venues, he called wedding gift, wedding. And I said, you killed it right there. You're writing the word wedding all over it. It's not business. Yeah, but we talk business and it helps me market. So it was a little bit of a back and forth, but I persuaded him, don't push this. This is not, reasonable, necessary, or ordinary. It didn't hit a lot of those elements. So that's just a one-off example, but sometimes you have to check yourself and see how you can connect the dots. If you know that's what you want to do, then just construct the transaction so it meets those elements. How can you connect the dots? If you have to go to fly someplace to see somebody, how does that relate to your business? And document that, memo it, like what was it for? Did you go to did you visit some location? Did you go to some movie or some museum or some clients, and how it was for that business purpose? So every time you can document reasonable, necessary, ordinary purpose in that year, it's good. You just have to make sure you know why you're doing it. It's not just spending. So anyways, those are just a little bit of an overview. We're going to go over some more information on a later segment. Thanks for listening.